Hey, this is Justin with daytradethemarkets.com and dailymarketassistant.com, and I wanted to look at the crude and gold markets today and talk about what we call a conflict situation and how you deal with that. Now, I know we had the FOMC meeting today, and the index markets I didn't find all that interesting. We had a lot of volatility at the time of the meeting, but they just worked their way lower as we would have expected heading into the day. So I didn't think there were any huge developments there. So I thought I would use this opportunity to just talk about, give some examples in crude and gold. I know there's a lot of traders out there that trade crude and gold, and talk about how to handle, again, what we call a conflict situation. And these levels I'll be talking about, again, are from a relatively new site that we've set up in response to people really asking for it. It's called Daily Market Assistant. So I'd recommend going over to dailymarketassistant.com. You can take a trial if you haven't done so already. Feedback's been pretty good. I think that it would help just about any trader who is relatively serious and is looking for help and more of a roadmap idea, helping them make sense of a given market on a given day, help you make better trading decisions. So I highly recommend doing that. But with that said, what I wanted to do next is talk about, like I said, the crude and gold market, and talk about them in the sense that, in fact, here is our the report from today on the crude, and we also do it for the crude ETF, the USO. But this, you can pause this if you want, but essentially what this is telling us is we have two different, what we call directional biases. There's a day trading, what we call a day trading bias, and a swing trading bias. And in this case, heading into the day at least, there we're in conflict. So bigger picture, we were still more of an up bias, and then the shorter term traders might be looking more for short positions heading into the day. Now, so what do you do when that's the situation? Well, one is you could wait until both of them are in alignment, or just avoid that market in general. That's one way to do it. Or you just focus on what style trader you tend to be. Are you more of a short-term in and out scalper type trader? Well, then you'd probably be more focused on this day trading bias. If you like to swing trade or look for that one really nice trade per day, that sort of thing, then you're probably going to focus more on the swing trading bias. Like I said, you can wait until they're both in alignment. That's when you can tend to get some really nice trades. But if you are willing to take trades in this market when they are in a bit of a conflict, then you just want to be aware of that and know that you need to be a little bit more nimble in your trade management. Make sure the trade goes in your direction pretty quickly. Be willing to get out of the trade probably a little bit earlier, just because the market is more in alignment. Now, with that said, markets change, things change, scenarios change, and that's why we always put what we call a change scenario in. So in this case, what we were saying is the market, this 96.95 is a pretty key level if these bears are really going to come in here and test taking back over this market. If the market can stay above that level, that's a pretty good sign that all signs are pointing to the up direction, and then you could kind of hop on board with that. So that's what we call a change scenario. And beyond that, you can pause this, I guess. We wanted to look at this 96.50 to 60 area, also the 97.70 area. You can also see that down here as well, 96.50, 60, 97.70, and so forth, as we would move in different directions. So what we recommend then is when before your trading day, is write that down on your chart, or make some notations on your chart. And so again, heading into the day, if we could stay below this 96.95 area here, our bias was down. If we were going to be back above it, our bias was more up. Okay, so you can see that early on in the day, we opened right below that 96.95, tested into it, and then fired off there pretty good with that level 3 or extreme selling aggression. So a lot of aggressive selling coming in off of that level, and then the market tested down into this up next key level down here where I've drawn a box at 96.50 to 60, and you can see that we did find some support in there, tested back up to our line in the sand. And then with the, we had the crude report here on Wednesday, 10:30 Eastern time on Wednesdays. You can see that we tested in there with some pretty good selling, and we got below kind of in that area where really a pretty good testing area in terms of our bull is going to come in, or our seller is really going to take over this market, as we talked about in the report there. And you can see this bar was quickly rejected. Not only did the very next bar, and this happens to be a 2-minute chart, you can use this with any time frame, not only did the very next bar have its high taken out, on the very next bar, which shows really strong rejection. It shows that selling was not attracted there. Instead, price auctioned low enough to attract some really strong buying. And that was reflected within this next bar as well, which was showing rejection of this selling bar. There was some strong buying. We have some follow through. It closes above this selling bar. Very good clue that there was rejection of these lower prices. And then you can see we bust through this quote line in the sand and do so on a level 3 or extreme selling aggression bar. So you've got a scenario where a lot of things are coming together right there, where you've got the high of this level 3 selling bar is taken out, and it is done so as not only is it's taken out, but it's done so with an overlapping level 3 buying aggression bar. This also happens to be right at this quote line in the sand. So this is a very important area right around 97, the 96, 95, 97 area. That's what I mean about giving you a bit of a roadmap. But you know that as when you're trading this day, this is an important level. Not only is this 90, we wanted to certainly see how the market reacted down at this level, and it did so on that news, but this is really an important level that we want to monitor. So we know that the lows of a level 3 bar, this buying bar, tend to act as support. We know that this 96, 95 area should act as support. We've seen some really good buying structure replace the good selling structure, take it over. So all signs are saying that you want to find some way to get on the long area or on the long side. And certainly in this 96, 95 to 97 area is a pretty nice place to get on board. Once that happens, then our next level up would be at this 97.70 area, which was our next level up. And you can see that would be certainly a good target, or certainly an area where when you get into that, when the market gets to that level, you want to monitor what happens. Now, this is at the very end of the regular trading hours, so you'd probably want to be getting out of the trade soon anyway. But that certainly is giving you a nice target, as the case may be. So, again, the point, and I'll show you the gold next, point would be that we went into the day with longer term, we still had more of an up bias. More of a shorter term bias was down, but if we could get above this 96, 95 area here, then it would all align and be a good situation, which led to some good opportunity today. So that's what I mean by that roadmap idea, helping you at least know what's important, know where to monitor the market's activity, whether you're using these aggression bars from Day Trade the Markets or you're using your own method, whatever the case may be. So hopefully that's helpful. Next, I wanted to look at the gold market here. And here's gold, and this is also a 2-minute chart. And if we go back to our assistant here, we'll scroll down to the next market, which is gold. And it's a similar situation where, in this case, our day trading bias is more down, at least to start the day. Our bigger picture bias, longer term, is up. So we're in conflict. So you either say, I'm one style or the other, I'll focus on that, or I'll stand aside and wait for things to line up. So again, heading into this day, what we wanted to look for is, well, first of all, you can see we closed yesterday down here around 1250. So the first level we wanted to monitor was the 1252 area. That could be a pretty aggressive place to get short. Obviously, we opened well above that. We then would want to look at the 1258. Well, we opened well above that. So that's our first clue that things could be changing, obviously, and you're obviously going to see that in your overnight chart as well. But just when you're looking at the regular trading hours, it's not going according to expectations, okay? So when we like to look at things, what do we expect, or what quote should happen, and then does that happen? If it doesn't, that's also giving you information. So the fact that this market's attracted some pretty strong buying in the overnight session is pretty good information. And then this line in the sand again at 1263, that's our key level we want to watch. You can see we open above that. So, okay, are things really changing? We certainly had a nice gap up from the close yesterday. Are things really changing? Well, you can see we open above 1263, test right into it, decelerate, and then head higher. Head right into our next level that we're looking at from the report that you can look at, which is at 1268. You can see we try to take that out on some strong aggression. The very next bar decelerates and has a divergence. So that's telling us, okay, a little bit of a quick rejection up there. Let's see how the low of this bar handles it. Well, we tested the low. It bounces a bit, but we can't really get through this next level of 1268. We tried for about an hour, 45 minutes or there or an hour. Then we get some selling and break back below the low of this level 3 bar. Come back down to our line in the sand, have another bounce to the resistance area. And then we stay in here for a couple of hours, and finally toward the end of the day break below the 63 area. So, what does this mean? It's telling you that 63 level is pretty important. Now we are left with a gap